What if the key to finally affording a home was actually a trap designed to keep you in debt for the rest of your life? A new 50-year mortgage is being sold as the solution to the housing crisis, promising lower monthly payments. But we're about to uncover the disturbing truth these banks don't want you to know. We'll show you how the dream of home ownership is being twisted into a financial nightmare you might never escape. Most of us were raised on a simple premise: buy a home and you've made it. It's the cornerstone of the American dream, the ultimate symbol of stability and success. But for millions of people right now, that dream feels more distant than ever. Home prices are soaring, and a median income household now has to spend around 39 to 47% of their income just on their mortgage payment, a level not seen in decades. In fact, people are searching online for help with mortgage more than at any point since the 2008 financial crisis. The frustration is real. It feels like you're playing a game that's rigged against you, and you're not wrong. Into this crisis, a new solution has emerged, hailed by some as a complete game changer. It's called the 50-year mortgage, and on the surface, it sounds tempting. The sales pitch is incredibly simple. By stretching your loan over 50 years instead of the traditional 30, your monthly payments go down. That's the big draw. For many, this looks like the only way to get a foot on the property ladder. Proponents argue this could bring millions of people into the market who were previously locked out. Let's look at the numbers they show you using a current interest rate of about 6.25%. On a $400,000 loan, a standard 30-year mortgage will cost you about $2,463 a month in principal and interest. With a 50-year term, that payment could drop to around $2,180. That's over $280 back in your pocket every single month. In a world where every dollar counts, that feels like a lifeline. It feels like breathing room. And that's what they want you to focus on, the immediate relief. They're selling you on a feeling of possibility, the idea that you can finally afford a bigger home or a home in a better neighborhood, all because the monthly math seems to work out. They might even tell you it's flexible, that you can always pay more later if you want to. But here's the problem. The most important part of a magic trick is what you don't see. And the 50-year mortgage is built on a series of financial illusions that hide a disturbing truth about modern debt. Here's what you really need to know. The system is designed to profit not from your success, but from the amount of time you stay in debt. The longer the loan, the better for the lender. First, let's talk about interest. This is the brutal truth they don't put in the brochure. While your monthly payment is a little lower, the total interest you pay skyrockets. On that same $400,000 loan, a 30-year mortgage at 6.25% will have you paying around $487,000 in total interest. But with a 50-year mortgage, that number balloons to over $908,000 in interest alone. You're paying an extra $421,000 just for the privilege of a slightly lower monthly payment. It nearly doubles the total interest cost. You're not saving money, you're just dragging out the pain. But it gets worse. The second part of the trap is the illusion of home ownership. You think you're buying a house, but for the first decade or more, you're essentially just renting money from the bank. With a 50-year loan, your equity, the part of the house you actually own, builds at a glacial pace. A massive portion of your early payments goes almost entirely to interest. It could take you nearly 28 years just to own half of your home. With a 30-year loan, you get there in about 18 years. Think about that for a second. Most people don't stay in one house for 50 years. So when you go to sell after a decade, you'll find that you've built almost no real wealth. You spent 10 years paying back the bank only to walk away with very little to show for it. This makes you incredibly vulnerable. If house prices dip even slightly, you could easily end up underwater, owing more on your loan than your home is worth. While these loans aren't mainstream in the US yet, they are being seriously discussed. And this isn't a new idea. Lenders have tried ultra long mortgages before, and other countries like the UK and Japan have experimented with them, serving as a cautionary tale. The biggest problem with the 50-year mortgage isn't just the math, it's about what it does to our relationship with time, with work, and with our own lives. The word mortgage literally comes from Old French for death pledge. It was a debt that was supposed to die when it was finally paid off. The 30-year mortgage, which became the standard in the US after the Great Depression, was created when life expectancy was just under 60. It was designed to be paid off within a working lifetime. Today, life expectancy is around 79 years. And according to the National Association of Realtors, the average first-time homebuyer is now 40 years old, a record high. A 50-year mortgage means they'd be making payments until they are 90. You aren't just signing up for a loan, you're signing away your financial freedom for your entire active life and deep into your retirement. You're being asked to pledge your life to a debt you may never outlive. There's a powerful historical counterpoint to this as well. The ancient biblical concept of the year of Jubilee was a societal reset every 50 years. All debts were forgiven. It was a recognition that perpetual generational debt was a moral failure, a trap that could destroy families and communities. It was a promise of release, of a fresh start. The modern 50-year mortgage is the exact opposite. It has no forgiveness, no reset. It turns time itself into collateral. It asks one generation to take on a burden they may very well pass on to the next. One congresswoman put it perfectly, stating these loans will, quote, ultimately reward the banks while people pay far more in interest over time and die before they ever pay off their home, end quote. This isn't just a financial product. It's a reflection of our priorities. We have to ask ourselves, is the goal just to get people into a house, no matter the long-term cost? Or is it to build real, lasting financial security? If you're getting value from this breakdown, hit that subscribe button and let me know your answer to this question. Would you consider a 50-year mortgage? Let's be clear. The 50-year mortgage is not a solution to the housing crisis. It's a Band-Aid on a gaping wound, one that can make the problem worse by fueling even more housing inflation. It doesn't build more houses, it just creates new ways to chain people to the existing, overpriced ones. It treats the symptom, unaffordable monthly payments, without curing the disease, a chronic shortage of affordable homes, as well as a chronic shortage of well-paying jobs. The real dream isn't just to have a mortgage, it's to be free from it. The goal isn't to be house poor, trapped by a payment that dictates every life choice you make. The real goal is financial freedom. Empowerment comes from knowledge. By understanding how these products truly work, you can see them for what they are and reject the idea that the only way to own a home is to sign up for a lifetime of debt. It means looking at smarter options, maybe a smaller starter home, a 15-year mortgage if you can swing it, or even choosing to rent strategically while you build wealth independently. The American dream was never about being in debt forever. It was about building a life of your own choosing. The 50-year mortgage doesn't offer that whatsoever. It offers a 600-month payment plan. It redefines home ownership not as an achievement, but as a lifelong obligation. And that is a dream we should all refuse to buy into.